Let's bring in our next guest, Patrick Furlong. Patrick, hello.
Hello.
How's it going, buddy? Good to see you.
Doing great. Good to see you.
Patrick does reverse mortgages. Why don't you do this? Why don't you tell me about the reverse mortgage, because it kind of sounds fishy.
Okay.
Okay.
You're not the only person that has some misconceptions or some
Because they've been around for a while, right?
Well, it came out back in the 60s, and it's just evolved and evolved and evolved. Congress has done a lot to protect consumers now. That's why I say a reverse mortgage, really, there's absolutely no risk.
Well, let me ask you something. Was there some risk before? Is that why people are kind of shy away from them?
I think the risk was really in not being fully informed about how it worked and what your obligations were and what your obligations weren't. But the thing that makes it so, to me, so attractive is that when you understand how it works, and it's not complicated, is there really is no risk. Because when you define risk, you're talking about something unknown in the future. And there's nothing unknown when you have a reverse mortgage. You know everything. You know how much you're going to owe in a year, in 2 years, in 10 years. We give you full amortization schedules. You know to the penny how much it's going to cost you in terms of appraisals and flood certification, documentation. I mean, we have to...
Do we need flood certification? We can't even get it to rain.
Yeah, that's a great point. That's a great point. Depending on where you are. So in different parts of the country, they have more. If you're in a floodplain, regardless if there hasn't been any water, you're going to need a flood certification and probably flood insurance.
Give me a simple numbers rundown. I want to know how it works.
Well,
they said like $100,000 home.
Well, the way it works is that it's based on your age. You have to be at least 62. It's based on the equity in your home, and it's based on the interest rate at the current time. Okay,
interest rates are low.
Yes.
62 years old, and I have $100,000 of equity in my house. What can I do?
Well, let's make it a little simpler. Let's say you have a $200,000 house and you have a $100,000 mortgage, and we can, because you're going to qualify for, say, 55% loan to value, depending on a few factors.
So it'd be $55,000.
Well, if it's a $200,000 house and you have a $100,000 mortgage,
$100,000 mortgage, you get 55%, right? We
can pay off that mortgage.
Okay.
So, and again, it depends on the interest rate structure.
So you pay off the mortgage, and then you're the lien holder, or the bank, the
lender.
Okay, the lender's the lien holder.
There's lots of different lenders, and most of these loans get sold off to Jennie Mae. But it's just like a mortgage you have on your house. You borrow the money, the bank puts a lien against your house, you live in the house, you own the house, you're on the title. When you sell the house, you have to pay the bank off whatever's owed. And it's the same thing with the reverse mortgage. The difference is there's no payment. So instead of paying interest each month and principal to the lender, the interest accrues. So that's the attraction.
Goes on the back.
Yes, it's just like if you had a certificate of deposit, let's just say for 10 years at 6.5% interest. You put $100,000 in the bank, 10 years later you go back and they're going to give you $190,000 or something like that.
So is that what happens? They take the $200,000 house with the $100,000 mortgage and they take $100,000 and put it in the bank and it starts accruing interest?
No. Oh. I'm just saying it's as
that'd be nice.
Yeah, no.
Right.
They make you a loan and the interest accrues, just as if you had given the bank $100,000 for 10 years and the interest is going to accrue for you with that certificate of deposit.
What about the monthly income? How does that work?
Well, it used to be that we never looked at monthly income. We didn't look at...
No. The monthly income from the equity on the home.
Okay.
Because that's what the reverse mortgage does, right? It gives you monthly payments so that you can get by.
Well, it does a lot of different things, and that's the really nice thing about a reverse mortgage is there's so many different features. And I'll just give you an example. And let's go back to the example of the $200,000 house. But let's say that you owe $50,000 on it, and you're entitled to get $110,000. Okay, let's just say hypothetically, your reverse mortgage altogether can add up to $110,000. So we have there's a $50,000 mortgage existing now. We pay that off. Okay. Now, let's say that the borrower wants to put in some artificial grass.
Okay.
All right, so we're going to put in some artificial grass. Let's say they want to modify the kitchen so the drawers are easier to open and close. Let's say they want to put in one of those nice tubs that are easy to get in and out of. We can include all that. So let's say that between the mortgage, paying off the mortgage, the grass, and the other home improvements, let's say we're at let's say we're at 75. So we still have $35,000 left. Now, let's say that somebody does want that monthly income. Depending again on their age and the equity in the home, we can give them monthly income. Maybe it's going to be $300 for the rest of their lives. If they live 10 more years or 100 more years, they're going to get that $300 for the rest of their lives. On top of that, we can give them, again, depending on the equity and the age, we can give them a line of credit on top of that. So you can pay off a mortgage and other debts. You can do things to modify the home. You can have monthly payments, which we call tenure, and you can have a line of credit. Let's say you want to make sure that you have money to pay for some in-home care at some point, or for some other home repairs at some point. Let's say that you wanted to pay off that mortgage and you didn't want to have to worry at all about making your property taxes and your insurance and your homeowner's fees. So we could make sure that those are paid every month for the rest of your life. So you sleep at night. I don't ever have to worry about any of that.
So let's say the mom or dad lives a lot longer than you think they're going to live, and they spend all this money. Does it run out? I mean, is there a time when you guys go, whoa, you've already used it up? Does that happen?
Well, there is going to be a maximum amount, but the line of credit grows each year. So as you get older and you're closer to the end, you can get a higher loan to value. So that line of credit continues to grow. Okay. If we're giving you a monthly payment, we're figuring you're going to live to 100.
Okay. Okay.
If you end up living 5 years past that, well, you're still going to get paid. What happens when you sell the home or you pass away, let's say in the case of you passing away, you're going to leave that house to somebody. Mm-hmm. And they can't just go in there and own the house. The reverse mortgage has to be paid off, or if there's a regular mortgage on there, it has to be paid off. Well, whatever equity is left after the house is sold or you refinance it belongs to the heirs. So that's the nice thing. And if there's not enough equity to pay off the lender, it's a non-recourse loan, so the lender can't come after you or your estate. That's why I say it's risk-free.
Wow.
Even though we have a variable, either fixed rates or variable rates, what I do is I show people the worst-case scenario. Live to 100, interest rates go up, it's capped, there's a 5% cap on it. Say tomorrow the interest rates go up 5% and you live 30 more years. What's the worst case scenario that that is going to be owed? Even though nothing has to come out of your pocket, it could theoretically eat up all your equity. Can you live with this? And if not, what's the alternative? Because you're always looking at alternatives. They may have retirement savings, might have a rental property. There are a number of different components. So there's always alternatives that we look at.
Answered a lot of questions, Pat. Thanks a lot for coming on.
Yeah, my pleasure.
All right, if you're thinking about a reverse mortgage, get a hold of Patrick Furlong. He's got the Chuck Leonard endorsement. All right.
Thanks,
hey,
Chuck.
we're going to take a quick commercial break. We'll be right back. Stick around.